Meta and Microsoft just dropped earnings that could reshape the entire AI landscape. In the next 4 minutes, I'll break down the 3 key numbers that sent both stocks soaring and whether this AI spending spree is genius or madness. Going into these earnings, Wall Street was nervous. Analysts were projecting around $44.8 billion in revenue for Meta and expecting Microsoft's cloud growth to slow down. The big question on everyone's mind: are these companies burning too much cash on AI, or are they building the infrastructure for the next decade? With both stocks near all-time highs, any disappointment could have triggered a major sell-off. Meta absolutely crushed it with $47.5 billion in revenue. That's 22% growth year over year and way above the $44.8 billion analysts expected. But here's what's really impressive. Nearly all of that, $46.56 billion, came from advertising. Think about it. While everyone's worried about ad spending in a tough economy, Meta's proving that their AI-powered targeting is so good, companies can't afford not to advertise with them. But revenue is just the top line. Let's talk profits. Meta's net income hit $18.34 billion, up 36% from last year. That's not just growth, that's efficiency. Their earnings per share of $7.14 beat expectations by a mile. Meanwhile, Microsoft posted $27.2 billion in net profit on $76.44 billion in revenue. For context, that's like making 35 cents of pure profit for every dollar that comes in the door. Here's where it gets interesting and controversial. Meta just raised their capital expenditure guidance to $64 to $72 billion for 2025. That's an increase from their previous estimate, and it's all going toward AI infrastructure. Microsoft's Azure cloud business grew 39% year over year, but they're also spending billions on AI data centers. The question is, are they building the future or just burning investor money? The market gave its verdict immediately. Meta shot up 8 to 9% in after-hours trading, hitting new highs. Microsoft gained 6%, also reaching record levels. But here's what's fascinating. This positive reaction tells us something crucial about investor psychology right now. The market isn't punishing high AI spending, it's rewarding it. Investors are basically saying, we'd rather see you spend big on AI now than fall behind later. So here's my honest take on whether these are good investments right now. Meta, strong buy, but with timing considerations. Meta is firing on all cylinders. The advertising business is a cash machine. Their AI investments are already paying off through better ad targeting, and they're diversifying with the metaverse play. The 43% operating margin shows they're not just growing, they're growing efficiently. However, at current prices near all-time highs, I'd recommend dollar cost averaging rather than going all in immediately. Microsoft, solid long-term hold. Microsoft is the definition of a quality company. The Azure growth of 39% in a competitive cloud market is impressive, and their integration of AI across all products gives them multiple revenue streams. The $9.4 billion returned to shareholders through dividends and buybacks shows they're balancing growth with returns. This is a buy and hold for the next decade stock. If I'm investing today, I'm buying both, but with different approaches. For Microsoft, I'm comfortable buying at current levels because it's such a diversified, stable business. For Meta, I'd wait for any market pullback or set up a systematic purchase plan over the next 3 to 6 months. Both companies are winning the AI race, but Microsoft has more predictable revenue streams. Bottom line, these earnings prove that the AI revolution isn't just hype, it's driving real business results. Both companies are turning massive AI investments into growing profits and market dominance. While the stocks aren't cheap, sometimes you pay a premium for quality and future potential. The question isn't whether AI will transform business, it's whether you want to own the companies leading that transformation.